Okay, hi there, guys. Just let me know, someone give me a give me a thumbs up if you can hear me loud and clear into the microphone, into the chat. We've only got a few people at the moment. We'll have a few more will be joining us slowly. A good day to be in the markets today, but well, a few things we'll discuss. But broken straight through that 6150 on the ASX yesterday, so I was powering it on today. G'day, Helen. How are you? All right, so we're coming through loud and clear. Let's get up and racing then. Welcome, guys. Anyone that's new, just the usual, welcome to TradeSetup in the live stream. We've got our general advice warning on the screen there. You can see smack in the middle there. The top left-hand corner, you can join us at Twitter. That's our, I think you call it Twitter handle. I'm getting quite adept at this now. At trade_setup. Top right is our Facebook channel. But most importantly, subscribe to us on YouTube. That's our bottom right corner. So anytime we do something, we go live, you'll get that notification from YouTube if something's going on, like it did just the other day, actually. So yeah, we get up and racing. The ASX power along today, powered along yesterday too. So it's sort of going against the flow of things at the moment. We'll have a bit more of a chat about that. The US is not doing too much. There's always the trade war concerns. They keep popping their rear in the ugly head, actually. When Trump, I mean, I'm still yet to be convinced that he's actually going to impose those tariffs, but we'll see how that goes. It more might be a bit of a not a stalling, a negotiation tactic. I think he's done it quite a bit in the past, come in heavy-handed, and it gives him a bit of a edge in his negotiations. But I don't think China sort of to be messed with on that front. I think they're very good at what they do there, and they've been probably doing it a lot longer than the US, really. So it'll be interesting to see how that pans out in the US. But I mean, it hasn't been hit. The markets really haven't been hit, especially in the US, haven't been hit too hard considering those trade war, that tariffs, and those concerns over there. A bit of a trade war kicking off. It hasn't really kicked off yet. I think there's still people just sort of not willing to take on too much risk, obviously, but also not willing to close out. Start dumping positions because of what's going on over there. We know it's all, hot air, hot wind, all argy-bargy between a couple of countries imposing tariffs. I mean, obviously Trump's got an agenda, like everyone, but it'd be interesting to see how that goes. Over here, we've powered along. Yesterday was a good day. We closed up above, I think it was at 61.70, so we closed above that resistance zone at 61.50. Actually, we'll just get that up now. Drop that there. I'll change my screen and I'll get the XJ out. There we go. So you can see that just powered through. That's that resistance through there. It's touched on a couple of times, and that's on the weekly. It's actually just triggered through the high back through 6,000. That was back at the start of the year, end of last year. Excuse me. It had a bit of a pullback, built another high low, touched up, have another go at it probably a few months ago, and then it's backed off and then bang straight through yesterday and today. Now just be wary too that it's not a bit of a end of financial year window dressing. So you got a few more days to go in this financial year, so it could be a bit of that, and a few stocks are kicking on nicely. You've got look at the banks, they've powered on. Look at a couple of daily charts. Actually, I'll get that up. They've been going okay, gapping up. Yesterday gapped up and continued on into the close. And again, that was probably dragged up into the close thanks to Asia. Asia was down quite a bit in the morning session. And then their afternoon session, I think there's a bit of bargain hunting going on. And they kicked off. So interesting note too, you look at, I saw somewhere on Twitter that it's the first time it's happened in the S&P where there's been three candles. If you look at a daily closes, the ranges, they've actually closed up for the session, but the actual chart is down. So each day it's gapped right down and proceeded to get bought up into the close from the open, but it was still down for the day. It's actually quite interesting. That's never happened, I think, before. 3 times in a row even. It's happened, a few days here and there, but it's never been the last 3 days when the actual chart is saying it's going down, but there's 3 green candles from open to close, which is quite interesting. So it's funny to see that. Obviously, it's pushed down in their night session, and then it's brought back up into the close during their day session. So I don't know what the reasoning behind, if that's just a bit of a tactic or what's going on. We'll take a look at the ASL. So let's take a look at the Dow now just to see if that's wasn't the Dow, was it, or the S&P? Yeah, so you can see those candles. One, it actually opened up, pushed up off the low here. The candle was actually down, so 3 down days, except the session was actually up for the day. So that's not a big S&P. And yesterday, actually, pretty much the reverse. So we'll see how that goes. That's that sort of retracement that we're expecting. Everyone's sort of expecting bad news. Sorry, everyone's expecting the market to come off with the bad news, but it's actually been held up okay, and that's showing during the day sessions when obviously a lot more liquidity, a lot more action. People are happy to buy it on the close, maybe buying cheap, expecting that starting to build some positions, expecting this market is going to turn eventually. Whether it's on the back of Trump negotiating, it's his tactics, and then it comes out and they come to some sort of reasoning between China and the US, and there's no tariffs, and it's all sort of a bit of a storm in a teacup, and then the market should power on. But if you flip it over and it's not, then this market really should be you'd expect it to be a bit weaker because it's going to affect the valuations, company or corporate earnings over in the US. I don't know if anyone read, they had the ECB, so not just the ECB, the Federal Reserves around the world. So you had the ECB, the US Fed Reserve, or was it the Japanese? I'm not sure what you call it, their Fed Reserve, and the RBA in Australia all made statements last night. And they're all saying this is, tariffs and a potential trade war, looming trade war, maybe, it is giving them reason to pause. Because if it does play out that way, obviously it's going to affect a few things. It's going to affect their outlook on growth, and they're saying they're already hearing rumors or talk of companies holding off on news, holding off on hiring, holding off on making decisions. Whether it's acquisitions or whatever the companies are doing, they're holding off until this sort of blows over a bit better, or until they find out more what's going on with the trade wars. Otherwise, you start jumping in head first, and you find out there is tariffs going on left, right, and centre. It's going to affect everything. So I think it is being crimped a bit by this talk more than anything. It's more stagnation than actually negative, I'd say. All right, I'm just having a bit of coffee there, if you didn't notice. So how is everyone anyway? Enjoying the day? I'm guessing with the Dow, what are we? No, sorry, the Dow, the XJ up 73 points. So that's blown. Look at that, and that's just powered on. Again, there's some companies. If you look today, I think Helen was saying in Discord too. There's quite a few that have gapped up, and there's quite a few too that are and have been strong for a while. Whether you expect them to be at the end of their trend or whether it's getting a bit long in the tooth on some of them, but either way, this, I guess, when it does push through strong resistance, you expect it to go on with at least a bit, and it just happens to match off or marry off with the end of the financial year potentially. So it is, you do have to keep an eye on things, but also it's there's no reason to stay out just because it's coming to the end of the financial year. Stay out of positions that look really good. You've got your good prime setups, sort of going for your A plus setups rather than something that you might take a B plus when it's a very strong bullish market. We're not a seriously bullish market, although the last couple of days have probably shown some good signs. I think it's more the weekly that I like. That grind is up, and we're probably getting to it a bit extended on the weekly chart, so it doesn't get too far ahead of itself. Actually, let's just draw that up, see if we get some sort of channel. I want to get it onto a bigger chart. Sorry, no. Let me just get that up there. So this is the weekly chart on the ASX. Right, so you've got your support coming through here. If we can roughly, no, I can't, can I? Not very good at this one. We'll try to match it up, marry it up a bit, but you can see, now if that is the channel and we're sort of bouncing in between that, we're still quite a ways off the high there, and we could have quite a decent rally, a little rally. And actually that might marry up to that 6,800 mark, which is around those all-time highs. Now, we'll have to go back to, maybe we can go back to monthly and just see that. Let's check out the monthly actually. I've seen a few things that's worth looking at. Where are we? Come back here. Don't know what everyone else's thoughts are. But this is what I've been following, mainly the weekly chart for the ASX, and just seeing, you can see that monthly looks quite strong. Whether you can just take it across the highs, and it's sort of, it might we might be looking up towards 66, 67, on the monthly. If you take more of a sort of your weekly channel, it's not really a nice weekly channel, is it? If we sort of measure something through there, it might be a bit more contained. You might find that we're sort of slowly getting up there now, but we'll see how it plays out. Might be due for that sort of minor correction. We might have a channel within a channel, if that makes sense. I don't like my drawing. Maybe too much coffee. Can't quite marry this up. There we go. So you can see it just bouncing. It might be just pretty content just to sort of bounce around within that channel and gradually edge its way higher until potentially the US starts kicking on. Who knows what's going to happen? I mean, the US is still quite bullish. Had a couple of down days, obviously, but it's still, the longer term, it's still looking quite good. It's holding high lows. Same with the ASX. You look at the same with the Dow's come off a bit more than the S&P, but we go back to the daily. That's, if it doesn't hold up here and it starts crashing through this 24,250, okay, we've got a bit of reason to be concerned, but don't forget that's only the top 30 stocks. It's not the overall. I mean, it is the biggies, but some of these big ones too have been restrained or constrained the last few days from because of potential trade wars. We'll see how it goes. What else? We've got the DAX, FTSE. That's your daily there. That's a couple of down days, but that's, again, if you look in context of what's happening potentially in the week, we've had that weekly's powered up into new all-time highs, and as soon as we got to new all-time highs, we started backing off. And as you would expect, so what is it? 1, 2, 3, 4, 5, 6, 7, 8 to 9 weeks is straight up. So that's been positive for quite a while on the FTSE. So you do expect it to rush through the highs, wash out. It's going to drag in some traders and then just sort of a bit of profit taken in there. Now it'd be interesting to see if we can hold up above these MAs, start building another higher low, and start edging back up again. Again, sort of a lot of it's dependent on the US and how that goes. And the trade war is a big thing at the moment because the growth's there. You've got growth in the US. You've got global growth pretty much kicking along okay. It's just whether or not, like the ECB and your Fed reserves were saying, whether it does crimp growth or they have to change their outlook. Maybe they hold off on a rate rise. In the US, that'd be interesting if they do that. And Europe, they're looking at tapering, and now they're potentially talking about a rate rise. Now that's going to be even further pushed back even further. So that was that. The DAX. DAX could be just chopping around here and then popping up again. But either way, that's still, for me, that's still positive. You got a nice little support base through here. That's that original sell at the start of the year. It held up around that 12,000. It did wash it out quite a bit. I mean, on a weekly chart, it's not much, but when you go down in point value, it is probably 100, 200 points. Washed out, then popped back up. Same as the FTSE, quite nicely. If we just get a bit of bounce around here, a bit of sideways action, a bit of consolidation, the longer it consolidates, the more powerful I would expect the move to be up. But we'll see how that goes. So that's sort of it in a nutshell. I'm liking what I'm seeing on the XJO, but at the same token, it is. I mean, after the last couple of days' action, it's just powered straight up through. Now, if you just look at what we saw on the FTSE and especially the DAX, getting up through the highs and then backing off straight away, then it might be that we might be a bit in the same boat. It's dragging, and of course you're going to drag in some buyers. As soon as you get the market break a key level, euphoria kicks in. Everyone doesn't want to miss the boat. They're seeing clear skies ahead. They jump in, and of course they're jumping in at the highs. The market turns around and has a bit of a pullback. Doesn't matter so much if it's just a pullback in relation to overall market uptrend. Because I think you can jump into some good stocks, and rather than they don't really pull back, they can just go sideways. So it's not too bad. It's if you do see a major correction, which you're going to be concerned with, because that's when pretty much everyone throws in the towel and things can just capitulate and drop like a stone. So I don't think we're going to see that, but anything's possible. You've got to be prepared for everything. So at the moment we've got a few on the go. Let's just go through them. Start chucking in some stocks, guys. Anything you want to look at. I was going to touch on one currency in a minute. I just thought it was interesting. We can flick through a few. Been having a bit of a play around. There's someone else in Discord. Bitwise has been playing around with the currencies a bit. Got it wrong, but made some money, which is kind of funny. So we'll have a bit of a look at those and just see. I think the US yen could be in a bigger, could be set for a good move down, but we'll see how that plays out. All right, what do we got? Whitehaven Coal, that's kicking on nicely. We've tightened up our risk. And the one and only reason I know it's probably quite tight risk, I know this probably goes in the face of it sometimes. I mean, if you're looking at the weekly chart, ideally your stop should be down here below 4. Obviously, that's below where we got in, but that's the most recent lower high. But what you can see from that chart is that this trend is potentially getting a bit long in the tooth. You can see it's getting a bit extended up here. And again, doesn't mean it can't keep going. Just because it's overbought up there, or it's hovering around the 80% mark on the stochastics, whether you look at MACDs, whether you look at RSI, it doesn't matter if they're all sort of in that overbought territory. No reason to get out. But what I use that for is that, okay, it's taken quite a bit of pressure to get up here. How much more buying pressure can be there in the sidelines waiting to come into the market? I mean, if you were in the sidelines waiting to come in, I'd be skeptical. I think you're probably not your highest probability trade. But on the flip side, when you're looking at that, when you're already in, you've got to look at that thinking, okay, how much is left on the sidelines that can continue this trend up? If you can honestly say to yourself, probably not that much, because it is getting a bit long in the tooth, then it might be a time just to tighten up the risk, especially if you're coming into potentially that. I'm not saying that's a resistance. That's probably your next level, the key, the whole number at $6. We spiked up to there, or close there. What did we get to? High 590 a couple of days ago. And you can just look at on the monthly trend. It's been going up since 2016. You've had a big push up, pretty much through 2016. Bit of sideways consolidation through 16, 17. Another leg up, and that leg really hasn't stopped. It hasn't had a major consolidation just yet. I mean, that red candle, which is on the monthly, obviously, the start of this year, really not consolidation in context to this move up, or not really a higher low. I don't really count it too much. Probably on the weekly, yeah, but this leg is just one leg up. I call this one leg up. That a macro correction, then your next leg up. So we're getting a bit long. So that sort of $6 market could be an area where there's going to be some reaction lower, bit of profit taking, bit of some locking in. Otherwise, even if it does this type of thing and goes sideways, I'd rather be out. I'd honestly rather be out and reassess it, because if it does roll back and have a deep correction, I mean, look how far it's getting away from those averages. If you go to the weekly, the same. It's getting away from those moving averages. It's going near vertical. When things go near vertical, they don't tend to consolidate sideways. It's very rare. It's a very strong market if they do. And if they do, all right, you can reassess it and get ready to jump back in. But you're better off, in my opinion, being out, being on the sidelines, locking in that profit. If you do get stopped out on that first sign of weakness, and the first sign of weakness really is for me if we push down through that 45 mark or below 50. I think we've had a bit of a go. We've rejected that level on this day and pushed up, took out the highs to 590, and we've had a couple of red days. It's been a bit more confusing. Yesterday we rejected the lows, and that was probably because in Asian markets picked up into the close. So did we. We hammered up through that 61.50, bit of euphoria there. So it's done all right. But today that's not convincing when the markets, if you think this is strong price action, it's not too convincing when it's opened up and it's actually lower than the open. It's matched off higher. Where did it match off? 571. We're trading. It's only a few cents lower, but it's not that convincing. How many people are around still willing to buy it? So happy to tighten that one up just to see. I mean, if I do get stopped out here, I think there's a good chance we can get a macro correction, or we correct sideways, and I can jump in again if it's starting to look and show some more strength. But if not, I'm not going to get hit too much. Murray, how are you, mate, by the way? I've been shorting it for the last week, been doing well, but it's getting hard the last 2 days. Yeah. All right. Are we talking about the ASX or currencies? Just confirm that. Let me know what you're looking at there, Murray. Yeah, so that's Whitehaven ATS. We've got it at 41. It's at 42. Look, it did spike up, but in context of what's happened in the past, that's pretty normal. We got it on the rise, and then this action here it's more of a pullback. It's not weakness. Pullback, a bit of a reversion to the mean. Hopefully, it starts picking up soon and starts kicking up into new highs through 46. But either way, we've got to stop a fair way away. So I'm not going to look at that today. yeah, we'll just have a bit of a look at that. ORA, Aurora, going nicely, actually going really nice today. That's kicking on. Now, where did I get into that one? 49. So I'm up a massive, or 39, up a massive 10 cents on that. But geez, that's been a bit of a 49, 349. So that's been a bit boring, but it is, we got that on the rise here. We had obviously straight away faced a pullback and it's bumped back up again. It's looking okay. So the weekly is the one that I like. I mean, you can see that weekly trend. It's nice and strong. I think this could project on a bit more. So we might get a chance if we can kick on and just get a couple of good solid days up and just grind up. We might get a chance to take a partial on that one. We'll have to see. It's not going to be a big gain, and I think it's going to be a slow grind on this one. And you can see that by the monthly as well, just a slow grind up here. We'll probably, look, I think we can push on a bit more. You can see that when it does go up, it starts kicking on quite strong. It gets a nice solid move up, like this price action here. So hopefully we're seeing the start of that. This just gives us a chance to take a profit when it's starting to show some signs of weakness or getting a bit stretched. But either way, that's on the right. We're on the right side on that one. CAJ, that's 30.5. I think it's looking great on the daily. But really, if you flick it over to the weekly is the one that looks good, and you can see, and this is the kind of thing you really do take notice of the time it's spent basing. Okay, so the longer the time, generally, Whitehaven, all right, got you. Generally, the time it's spent sort of basing, the longer the time, the stronger the move up's going to be, and it could be a bit more savage. Um, and that's what you're seeing. You've probably seen this big sell-off down here, down through 2016. It had a bit of a pop-up, and it's been sort of grind down towards the end of the 2016 and started picking up into 2017. Probably towards the end, mid to end, what do we call that? July, August? Actually, check August. Made that high and just sort of went sideways for the rest of the year. But that has had a couple of goes lower and been rejected, and then it's starting to build. You can see that starting to curve up again. So I think this one looks great. Just wanted to see it get on with it, and then we could take a partial on that one as well. And if that gets through 34 in the next couple of days, or maybe there's been some buying up into the close, then that would be quite nice. What do we got? TCL. We're about break even on that one, 12.20. So it's had a couple of good days, and then you get this sell off, and then into the close, it might spike. We might have got a bit late into this little pop, but either way, that weekly starting to look good. It's more from a weekly trend we like. It's had a good move up, a good washout here, another move up through the highs, and just tried to take out the highs on this pop up, and it couldn't, so it's had to correct. Just washed out this major low here, and then it's starting to build again. So that's not a bad sign when it's, especially when it can't just go on with it like this part. You can see since about July last year, it took off, it started going up, took out the highs, but really it's just more of a washout. So when the market can't go on with it from there, it doesn't finish. You want it to finish above and close above for that week or month or day or whatever your chart you're looking at. You want it to close above. That's a good sign of strength. When it rejects it and closes below a resistance zone, it may start to see a bit of weakness, which we did here, and that becomes more of a double top than a new high. I'll classify as a double top. So double tops would lead to a bit of weakness, and that's what you saw over probably the next few weeks, few months actually. And then we just pretty much what did the reverse, washed out this higher low. So that is a double bottom. So it's that, to me, that's not a bad sign when you clean out that and then you start to show some strength, because what you're going to get is people who bought it late in here or late here, or even are still holding it and held all the way through this rubbish. You're just going to get jack of holding it, and they might have just raised, if you bought it in here, for instance, way back when, and you were really bullish on it, it was great. Then you sat through all this and you go, oh, crap, I don't want to see that. And then it's bounced back up again. You go, okay, here we go, back in a profit, and it's turned around and did this to you. You're not going to be too happy, and you're not going to want to see that again. You're not going to wear it because you've been holding it for quite a while. You're not going to be wanting to risk too much on that. So you probably, you could have just tacked your stop below that, around that $11 mark, bang, stopped out just here, and the market's turning around and pushing back up on you. So that's what the market does. It tends to clean out a few levels just to get that momentum. It'll stop people out, puts people on the sidelines. They see it turn around and going back in their favor. It's confirmed that they're probably going to miss out now. They tried, and you get that sort of revenge trading, whatever the reasons are, jumping back in, and then it's starting to build again. So I don't mind that one. We just want to see it kick on, obviously. We want to see it push up to 13. If we can do that, we'll be looking for a spot to take a partial. Now, what else we got? That's that one. PLL, that's hanging in there. Still pretty much where we got him, but that, again, that weekly chart looks great. It started, if you've got this big move up, clean out, retest the lows here at 14, even a small washout then, it's starting to lift. You've got your higher low. So technically everything's in place for it to test up towards 25. And being such a low number stock, as in it's only 20, 21 cents, that could really power on if you go back. I mean, look at that. I mean, that probably means nothing way back there, but you can see a lot of price action doing nothing now. It's just starting to lift now. So, I mean, that there could really start to kick on. We'll just have to see how it goes. Do like it though. Trade's a lot smaller than some of the others. Obviously, it's only traded 20 and 20 and a half cents, so not much at all today, but it's got the volume there to hit. And last one, car. Bit of a bugger. We missed entering that 1 cent. We had an entry at 15.10, and I was thinking about entering, just moving it down yesterday and just entering because that, great price action. You've got this sort of chop around here, and then it spent the last probably month and a half holding this higher low. So that was really nice. You got this sort of chop, holding, higher lows in here, higher lows, higher lows. It's just starting to build. So I was about to pull that down and say enter it around 15.05. Didn't, and it obviously gapped up to 20. So we left 10 cents on the table there, which is a bummer, but it's still up, still going strong. And we're looking, that's off your weekly chart. I'm looking to push through those highs. And if we just kick on a bit, start to look extended, take some partials, and then just sit and watch it. So that's us in a nutshell. All right, we'll take a look at that. So chuck in anything you want into the chat, and we'll just rip into it and see how we're going. First one, Mel, g'day, mate. Link. Sorry, just 1 second there, guys. Just one tick. Sorry, just a couple of questions from the grandstand behind me. All right, what do we got here? All right, what do we got here? Link. Ooh, we're in there on the weekly, so straight away, I don't like it. It's more of a rangy type of a trade. And that's everything, isn't it? Well, link administration holdings, 11 million. So just Mark, just looking at that quickly on the weekly. Just want to draw it up. I mean, obviously you've got to drop it down to drip it. I'm dribbling myself. There you go. So you can see that it's just traded. You got absolutely hammered, and it really couldn't get through. So when you see, I think there's two things to take note here. This price action is beautiful. I mean, that there would have been a prime entry. It's probably harder to see. You could have had an entry in here knowing that your risk is there, but it's a bit more grindy. It may not be as clear cut. Obviously, flicking it down to the daily to the weekly can show some really good price action. That there as it played out, I'm betting there would have been a really nice entry there on the daily, but the weekly quite powerful. And you can see that the market's it's open. It's pushed all the way up to around, what was it, 870, straight back down again. So a lot of selling. Come back down to those lows around 680 and started to hold up. And you can see that people are happy to buy it around 680. It's holding higher lows, starting to build again. And this, when it got ahead of itself, it pretty much closed that gap and a bit more, and then started to lift again. So there would have been a lot of people chasing that up. But the thing is, it's got straight into that resistance zone at 870, and then it was just starting to struggle. And that, I would expect that when you're looking, especially just off this weekly chart, if you've seen any chart like this, where it's daily, weekly, a minute, a 5 minute, whatever, when they get extended like that, it's done quite a bit of work from, pretty much the lower of the range, mid to lower of the range, straight up to that resistance zone. You've got to question that. Can that actually, especially when it breaks through, I don't like seeing it breaking through and then starting to struggle. I'd rather see it fall short. I'd rather see this sort of action fall short, then clean out a few, trade it, and start to build, because that, for me, when it builds up towards just below resistance, it's just going to blast through. That's what I expect to see. But when it goes through, I'd expect to see more chop and a bit of a major pullback. And that, I mean, it may turn around and just turn around and go bang straight back up again. But odds are when they wash it out and then back and fill back into the range, it's not that great. I don't see that as a very strong move for further higher prices. I mean, I might have just got lucky, or I might just be saying that because I've seen this candle where it's just gone boom straight back down again. So really, it's just getting rangy. So as we mentioned, if it is a rangy sort of trade, you're probably just coming off a prime zone there around that 680. So it's traded there a few times. So starting to find some strength there, and you can see when you've gone from overbought when we started getting up here, the market was stretched into that zone. So a lot of profit taken if you bought it off the support zone, if you bought it off the bottom end of the range, even through here, if you bought it and you've extended into that resistance zone. Let's clear all that out. If you bought it into that resistance zone, it is getting a bit stretched up there. So again, if you can sit there and ask yourself, how many more buyers are left on the sidelines to potentially press this up and through after a couple of days ago? Bang, it did try, but it was just cleaning out people. It was just cleaning out. So constantly, every time it popped up, I bet you'd see that on the daily. Every time it popped up, it was getting sold into because it was around this zone, around those highs, around 870, and it was just struggling. And you can see this little go, as soon as it got up through here, and then you got this washout here, and then you got rejection in here, I would have been bang straight out. I think that's really important to note when you're starting to get that. You've got a double top, a washout up here, and you see this type of thing. If you get onto the other side, you're looking for that shoulder. And by shoulder, we mean, I tend to take note of that. You got this type of thing. Shoulders always looking for weakness. If you get that shoulder on the way up, and same on the way down. If you get a market that's heading south and it starts to do this, that's a shoulder for the upside. It's potentially showing some signs, some early signs of strength, and that's early signs of weakness. And that's what you're getting pretty much in here, early signs of weakness. So if you're dropping it down to your daily, you probably have more than enough opportunity to either really tighten up your risk or just get out altogether. So after all that, beating around the bush, Mel, we'll get down to just what it's looking like on the daily, but it is coming off that weekly zone. So for me, I would potentially just feel, you can see this, what's happened before in this zone. It's had, spiked up, it's come back down to retest and even build a minor higher low, or even if you look at this, it's come back again. So I'd be looking for this to come back, and I'll be looking down to the daily charts just to see what's happening. If we flick over to the dailies, okay, for me, the dailies are getting a bit extended up here. So whether it's just going to spike up, I think that's the gap you're talking about, close that gap. I wouldn't really, to be honest, I wouldn't call that a gap at the moment, purely because, it's crashed down, and it's gapped up. It got so close to closing that gap, and then it got sold off again. I wouldn't even, and personally, I wouldn't be taking note. What I'd want to see after this move is a lot more work done, to be honest. I want to see that. Where are we? I don't feel, so we've got a zone. Well, it's about it's about that level down here. So I want to see this pop up. It's going to drag in a few people. It could get up to that level. It might spike through, but I want to see it pop up. And I want to see this action. For me, that's kind of important on the way down. Because on the way down, and then you start to build at a higher level, that's showing signs of buyers start to step in at higher levels off this support around 580. And that's also showing some sign of strength. If you get this type of move, it's grinding up and then boom, straight into support. Sometimes that can be some serious weakness, and then it just comes straight back down again. I like seeing this because it's accumulation on the way down, and then especially if it's followed by some minor inside higher lows. Inside higher lows would mean it's coming down here, and then it's starting to build that level. Inside higher lows, you give a nice little entry set up here, and then it starts to accelerate, because that's signs that buyers are stepping in. I mean, they could be stepping in here, and then they're starting to step in at slightly higher prices. And this is all in context of this higher low, a major higher low building. These are minor higher lows. So this little level here is a minor higher low. This whole zone is a major higher low in context of that 580. I hope that makes sense. But if we see this kind of price action, what that's going to do is anyone that's been cut up through here, anyone that's been following it for a while, following off that 580, this could easily, if we draw, I'll just clean this up a bit. This could easily just be, say it's got smashed down into that's that move down here. smashed down to support. It's bounced up, it's come back down, and it may just be finding a bit of confidence. It might just be coming sort of back in and then start to find some more weakness. And that could be, retest. It could be just popping its head through and then find some weakness off some lower highs. And that there could lead to a major sell off straight through 580. And you might get this big down move extended through support, really starting to clean out a lot of buyers, a lot of early buyers as well. So that's what you want to try to negate. You want to try to negate potentially that price action. That's like I'd like to see this off that support. I'd rather see a higher low, and then that to me is negating some potential further selling pressure that's going to take it down through 580, and you see people start to build it, to support it at higher levels. Like I said, let other people do the heavy lifting for you, support price at higher levels. And I hope that makes sense there, Mel. If not, if not, mate. Anyway, if like anyone, if you have a question, something's not making sense, feel free to send through an email. And if I've got time, I'm more than happy to have a chat on the phone, just walk you through it. And if you don't believe me, sorry. But anyway, TLC. Is that right? TLC, is that what you're looking at? Is it GA? Doesn't look good. Have they had a name change? What's going on there? There's nothing. Maybe I've got the wrong code. All right, Gary, we'll get it A2M. If let's get rid of that. Yeah, I've had my eye on this just the last few days. Telstra. Oh, TLS. Got you. In all honesty, I think. Okay. No worries, Ellen. Telstra. It could be. Oh, I just like bagging Telstra, to be honest. But in all honesty, I was looking at something. I mean, we were shorting this somewhere. Can't remember. I think it was up here. It was before this little pop up. It was somewhere around that 4:30 to 5. The most recent short was TLS. Most recent short was 4:31. Don't remember when. 4:31 on the 21st of. Oh, so it was that right? 21st of August. My line, 21st of June. So somewhere around here, we sold it in here, and then we got that little pop. So I think that was that gap up on that day. It was before this little pop up, and then pretty much got belted after that. So we actually did get out. We got out a long time ago, 371. So with today's prices, I'm still kicking myself on that. Probably could have. I mean, in here you could have re-shorted it, but again, one of my biggest weaknesses is even with Telstra. That's showing that's serious. You had so many opportunities to get out of there if you're long. If you're long from especially up above, say $5, you had a lot of opportunity to get out here. You got lower highs, and especially when you get. I mean, this is a prime example of taking note. See that little high? I'll mark it up. And this is what I mean, it's good for entries. If you flip this chart upside down, these are just entries if you're going long. So it's the same for exits. If you're looking at it, maybe your first sign of weakness is when you got this lower high as opposed to there. That's your first sign of weakness. Now, you don't know if that's just going to pop up, have a bit of a pullback, because in context, you probably got your anchor level somewhere around here. So if you don't know what I'm talking about, anchor levels, anchor's it's the swing level. I call it anchor. That's your anchor level of the trend up. If it pulls back, as soon as it breaks out through this high, that's your new anchor level. So that's what we're looking at for an uptrend and the reverse for a downtrend. So if this was your anchor at that stage, popped up here, bit of weakness. So here, okay, you may not get out because it really hasn't broken the anchor. And it's got to break the anchor to have confirmation that the trend has changed, because you could easily just go sideways, start to build again, and up she goes. And if you get out and you watch it going without you, then you're going to be a bit upset with yourself, just to say the least. Feel sorry for him because yeah, piloting a sinking ship. Yeah. The thing is, someone mentioned that yesterday when they reshuffle or whatever they're doing. They come out with an announcement. Correct me if I'm wrong, Paul. About yesterday saying the reshuffling. A lot of the time it's good for the stock, the company. The problem with Telstra, it's done so many bloody things in the past that people just get jack of it. And you have so many people holding it for divs, holding it portfolio, a lot of funds. And if the funds exit it, they're not going to enter too quickly either. So they might just be steering clear of this one for a long time. So it's just run out with so many people just bailing and jumping ship. Yeah, I think it's going to take a long time just to recover. And this is a well and truly entrenched downtrend. Now, when you get that, for me, it's going to take, and it's going to take, say this turnaround, so from uptrend to starting the way down, it's probably right up until about here. So that's a good year and a half before it really starting that trend down. So yeah, if that's the case, it might take a year or so just to come out of it. So you could just bail them. If you haven't bailed by now, there's probably something to be said to just holding it, putting it away, forgetting all about it, and hoping for the best. I mean, I don't like doing that, but you probably wouldn't be too bad, I guess. Not a great tactic, not trading in any respect, but dead, yeah. So what we're talking about here, by the time we got to about here, if this you don't want to get out, you could have tightened your stop up, you could have just put it below here, but I don't like doing that too much, just below this level because it hasn't confirmed anything just yet. Your anchor's here. I would be ideally put my stop here, and probably about here I might have been stopped out especially if I was holding it long term. If I was holding it short term, I might have bought it in here. Yeah, I'd have a hell of a lot tighter stop. I would have taken potentially a partial. I might have got out right about here, and just called it a day there. And that was prior to all this move down. So what you're seeing here on the longer term weekly trend, as soon as you get this lower high, okay, there's selling pressure coming in. As soon as it breaks through that anchor, you know you potentially got a problem, and it starts chopping around. You get this little pop through. It's a bit of a washout. It starts building again. It's suckering in a few buys again. But the problem is it has broken that anchor, so I'm always wary of that. Okay, there's something we said you can buy it there. That's fine. If you're going to buy it here with this break up through, and you just happen to get caught, if I clear that up a bit, if you bought it on a breakthrough here, you can see that it's just spiked up through and you had your stop here. You'd want to be putting your stop there, and that's because it's broken a long-term anchor. So when you get a long-term anchor broken, I'm looking more of this as being a potential move. That's your move down that broke the anchor. So that's all part of one move down. This is more correction, consolidation, and then you got your little washout here, and then you're looking at for another move down and equal. And in essence, it's just kept going. But if you've got that, and you bought it just in here, you've got to be wary that it has broken a longer term anchor, and we could be just turning around and heading south again on that secondary move down. We always talk about, for anyone that doesn't know, a lot of these pullbacks go in two waves, up, and you get your secondary wave down, and then might start building. So I'm constantly drawing that type of structure. That's what I'm looking for. This you might get that selling. People start to buy on the first bounce, and they get squeezed out of the market. And then as soon as you get your higher low, then you start to jump in. So this could be all of one major move, move down in that phase. And then, if we started to build from here, then you'd be wanting to look at, this type of price action, then starting to lift. Then you might be looking for an entry. As it played out, that didn't happen. It just got absolutely belted. So taking a step back, I can get rid of all this. Well, there we go. So when we started getting this move down here, okay, you're probably going to want to bail, especially if you're long. You've had opportunities. You had a little opportunity just in here. That there is weakness. Further weakness through here. You can see it's accelerated down here. It's tried to go back up. Started to get some weakness. This again, weakness. As soon as it gets through that low, up here you've got this little lower high. So you've got a lot of opportunity. And this is on a weekly chart. Don't forget, just to bail. You're seeing lower highs within a context of a correction. So you've got a move down. You've got this kind of move up. Then you've got this lower high. So you've got to take notice of that, especially if it corrects up like that. So we've got this correction up here. You've got your lower high, bang. A little bit of a correction up here. You've got a bit of a lower high in here or even here. And then we've got this move down. You can see again, it's corrected up. And then you've got your lower high down. So you really got to start just, taking notice of those just to, you just got to take notice of these little, I know it's intricacies of a chart, but it is something that it's a bit of a heads up that you're on the wrong side of the market potentially. And that's pretty much, I mean, if you flip this over and you're looking at this buying opportunity, you'd be laughing, you'd be loving it. So when it's heading south and you're long, it's a reason to get out, or it's a reason to enter short. All right, so I thought I'd just point that out. But either way, Telstra, if taking a step back, the only reason I could see to hold it is that it's coming straight down, this major support. Again, don't like doing that. Wouldn't like doing that. I'd rather be out and reassessing it. One, if it does nothing. I mean, when a stock does nothing, why be in it if you think it's going to do nothing for a long time? I'd prefer just to be out and calling it a day and just seeing what happens from here. You can see it's had that major pop up, come all the way back down, retested, popped up. What if that's a major lower high in context to what we're seeing overall? In all honesty, I think Telstra's probably seen its day. A lot of people might disagree with me, but if you've held it all the way down here, you'd want to be hoping to see it start to lift with a higher low, even if you're just trying to get out, or potentially you can enter it off here, but just be wary that it could be just a reversion to the mean. It might be short-lived, and you might get, again, the market works its way up, then gets your lower high, and then boom, you're in trouble again. So just take notice of the signs. Where am I? I've missed a lot of talk there. All right. So we talked about Telstra. Great. We've done that as TLC. A2M. Let's have a quick word on A2M. I mean, look at that. That is actually not a bad looking chart. You've got this move here. It's cleaned out a few people of this big spike up. So this could be setting. I guess it's probably better just going straight to the daily. I mean, the weekly, I don't think you need to talk about that. Look at that. That selling pressure. So you've got this massive spike up to 14 bucks. It's got a lower high. It's pressed down. It's come all the way back down to sort of that 9 from 14. And you can see the market's gone from overbought to oversold. So it's taken a lot of pressure just to potentially build a higher low. If I go to that daily, I think that's going to show it. The one thing I just noticed it then really. So you've got, that trend up pretty much. You've had a big spike up, and then people who have bought it in here being cleaned out. People who bought it, got the little spike up here, might have bought it in here, cleaned out, again cleaned out, and then you've come all the way back down. So that's coming back to the trend line. So it's basically reversion to the mean. Like we say, that's just coming back to the average, and the average is this trend up here. So really, if I was looking for this now, I'd want to see this for me. That's your trend line. We've come into it. We're just starting to lift. I want to see if I can see this price action. If I see this price action, I want to see it start to lift. I just want to see some higher lows starting to build, and it may take some time, but I'm happy to sit around and waiting. But definitely, you can see that's contracting. So we like to see a market that's contracting, and you're always looking for a market that's potentially contracting, and then you're getting in when it's going into expansion. So what that does, it stops you fluffing around. It stops you wasting your time in a market that's not moving when you're getting it into expansion. And generally, it's hard and fast. So it can take a long time just contracting, but then when it starts to expand, it's probably about a third amount of the time it takes to run up to get back up to the highs as it takes to fall from the highs, if that makes sense. So it might have taken 6 months, it might take 2 months to get back up there again. But what it means is that you're not wasting your time in a stock that's going nowhere or going sideways. You're wasting your funds. You're not making proper use of your funds. And you're in a market. I mean, everyone loves to see it when you buy it. It just keeps going up from there. You never like to be put under too much pressure. So that's another reason why it's always good to get into it when it's going into expansion. And I think that it may take a bit of time first, purely because of the kind of run it's had, but it's definitely coming into expansion. It's holding that trend up. And if you can get something like this, where it comes back, to this, say, $10 level and starts holding an inside higher low, and then I would be happy to buy it on a break. You got your stop just below that higher low. You know exactly where your risk is. It's starting to lift. You go into expansion, and away you go. And then really, it's just managing your risk on the way up, if it plays out that way. AFG. Right, it's only really today that's showing a few signs, except just a few things on this. It's probably not really need to look at. Yeah, I do and I don't like this. I've probably got to get down to that. If we just mark up the weekly, there's not much to mark. I wouldn't jump in. I mean, this is for me. Wouldn't jump in just yet. All right, let me just draw that up. So that there, I see a bit of support potentially through here, but it's nothing significant. It's not really the anchor for me. You can see that push down, pop back up, then we started to lift. So all this really is just that, probably a leg up to here. Then you've got, whoop, leg up to here. Then you've got a bit of a move down, lower high here, and it's just washed out. And then we've had this pretty much secondary move up to about 195. What we've done here is just gone boom, straight back down to this support zone. So that was really your anchor, which is blown straight through it. I mean, if it finds some support in here, I don't think it has just by looking at the weekly, and the daily is probably, I think it's showing the same thing. For me, this is the level I want to see broken, that 145. So if I can see, so that's 145, that's your major support down at say 120. We've come down, we've pressed up, we've sort of come down, just fallen a bit short, and we're about here. So for me, I would ideally like to see a pop up and then maybe that secondary move and then something like that. You know, you get the inside high low. And I love those inside high lows because what it's doing is reducing my risk when I'm coming out and I've got this major high low. So this would be a major high low in context to this, that 120 zone. And it's broken the anchor for this downtrend, which is around that 145. It's broken that down. It's coming back up. So it's broken anyone that's been selling it or is weak. If you're looking to get out of a long position, you might be thinking twice now because it's broken that level and then going, hang on a second, let me just hold off. I could be in, I might come back to break even, or I might be getting back into profit. You don't know where they bought it at. But this here is going to give them room to, a reason to think about or think twice. It's got that pop up here and then you get the contraction. If you start to get this high low as an entry, that would be awesome because you've got that break. You've got the potential that that downtrend is finished when you got this move. It's built a higher low, so that's a major higher low on the weekly. And on the daily, you've got an inside higher low to reduce your risk and you're going into expansion. And from there, again, it's just managing your risk and seeing where it goes. And if we start popping up to here and we start building a lower high on the weekly, it doesn't matter. Okay, you've made a profitable trade. If not, if it just keeps going, then you just keep raising your risk as you go. All right. So, large cap stocks. All right, Paul, I'm not calling you later on. Still teasing me about those. I got one for you. TCL, wasn't it? All right, just reading through the comments there, guys. Sorry. CTX going nuts. Let's just have a look at that. That's not what I want to see. I'll get rid of that. Oh, boom. And up she goes. So I mean, that's come off a nice little support zone through. It's just on the weekly charts. Actually, this is one I would be inclined to keep an eye on. I mean, on the weekly, it could be a bit rangy, as in, for me, you've got a range just longer term. Obviously, you've got it way up around that 38, and you sort of got a zone. It's more of a zone through here. You got this little level here, and it's fallen short. Probably, if we just take that back a step more, you can see through 28 to 29. So it's finding support off that sort of a zone, 28, 29, or 29.50, and it's just bounced up off that zone. So on a weekly chart, you got to take note of these sorts of things. It's come down. That's one move. That's a move. That's a move down here. So that's just taken out this higher low. Essentially, you've got a double top in place here. That's a move down, and it's come all the way back up. It's come all the way back up. So is this a major lower high, and this is all just part of this leg down, or are we actually going to find support? So for me, I mean, I'm off a weekly. If this was the chart I'm trading from longer term, I wouldn't buy it just yet. I've got that move down. We've just come up here. I'd want to see potentially that high low build, a high low support, or inside high low. So I know where my risk is. I can minimize the risk. I know that buyers are stepping in at higher levels, and they're going to at least push it back up to 37. And this is the zone which they're willing to defend, and then potentially going straight up through 36, up to 38, and even into new highs through 40. But if we just get this move down here, and then you get, instead of this type of move, you get this type of move, and it start to show weakness. That's sort of the reverse of what we want to see. And you're starting to find, so those inside lower highs, and then that could lead to a move straight down through 28. So just off this chart, I would be just hanging off a bit. But again, you've got to flick it. You're always going to look down a level just to see what's happening. I mean, buying it here, I would say, is too, as well and truly extended on the daily. Yeah, it's well and truly extended for me. I wouldn't be buying it up here. I'd want to be seeing that pullback on the weekly, and then that weekly high low. And I think you're going to get some good opportunity to be buying into this, and then potentially heading back up to 36 at least and higher. But we'll see. It is going nuts, Murray. It's a cracker the last few days, isn't it? Again, maybe end of financial year window dressing, but we'll see in a few weeks. Touching a bit of points, trend down. This has a banned sale to BP. Okay. Yeah. So Davin was just mentioning that. All right. So it looks like we've got through everything. Oh God, my lips are a bit dry. I've got a cold coffee in front of me. But I think we got through everything. If we haven't, just email me through to support@tradesetup.com.au, and we'll I can always shoot you out an email and just draw up some charts. So look at the market up 70, going along strong. What are we looking like intraday? I mean, that intraday action, again, it's looking to be a bit stretched up here, but that's a powerful trend up. 5 minute, are we showing any weakness? 5 minutes not showing any weakness. So yeah, it's looking good on the ASX. We'll just see how that kicks along. What have we got here? Something that we've missed, obviously. All right, probably call it a day there, guys. I hope you enjoyed that. Anyone that's new, feel free to send me an email to support@tradesetup.com.au if you want to have a bit of a chat. And also, we've got this Discord channel. If you're not involved in that, I'll give you a call about that too, Paul, by the way. Yeah, so the SPY futures expired this morning. So we're now gone from the June to September contract. So if you're a SPY trader, we're in the SEP contract. Call me. Me and Paul are going to set up a date. So we're having a bit of a fling. All right, guys. Thanks very much for joining me. Yeah, like I said, anyone that's new, give me a call and we can set up. If you're not on Discord, I'll let you know how to get on. But that's the forum that we've got running. We just basically sit there and talk rubbish. So if you're interested, you can jump in there and have a bit of a chat. Ask questions. I'll see if we can answer them. Sometimes Dav's in there. You jump in there and have a bit of a chat as well. On the rare occasion, he's a busy man, don't forget. And then there's other guys. There's enough traders in there to throw some ideas around and really get into it. So yeah, if you don't know about that, send me an email to support@tradesetup.com.au. Done. All right, thanks guys. We'll speak to you again on Monday. Have a great weekend. Cheers. Bye.